Trying to figure out whether you're an independent contractor and employee is probably one of the most asked questions in the area of tax and in probably the history of tax litigation. I heard a lawyer mention that one time, and I still think that that's the case. So trying to figure out whether you're really self-employed or an employee is the question at hand. So that all comes down to the terms of your contract. So you're either going to have an employment contract with your employer, or you're going to have an independent contractor contract, either for a job or an enduring period of time with whomever's hiring you. Under both circumstances, you have a contract. The question is, who's really in control and what sort of relationship do you have? So you're going to look at factors like, where do you work? Who controls your hours? Who controls your resources, like your staff or your software or your hardware, your computers? Do you have an office? And not anything is determinative on itself. And that's why this is such a gray area of income taxes, because it's been litigated and successfully litigated both ways when you have both sets of facts. So it's really hard to say when, but you need to be aware as to what the implications are from a tax perspective and what that means for you, whether you're an employee receiving a T4 from your employer and having employment income that you get taxed on as an individual, versus being self-employed and earning business income from a business and being taxed either on your personal tax return with business income, or deciding that, like we talked about in another video, setting up a corporation to have that business earn the income. And there are implications from tax as well as legal and insurance reasons why you might want to have a corporation to run your business as well. And the one distinction I want to make, and again, it's probably something we talk about in another video, is when we're talking about an employee versus an independent contractor being self-employed, whether or not it's through a corporation, that is distinctly different, completely different from an employee who decides to use a corporation. So at that point, you don't have a business. So if you're just an employee looking to set up a corporation for your employment income, not a business income, that's where you get into a whole host of other rules. And that's what we can talk about later, referred to as the personal services business. Well, I guess it depends. What does the CRA stand to benefit from doing so? Maybe I shouldn't say that, but it'll depend on the facts. And the CRA will come in, and quite honestly, they struggle with it too, because they're looking at the same research and tax cases that we do as practitioners, trying to help our own clients navigate the rules and deal with their own situations. The CRA is going to do the same thing. Quite often, if you want to take a bias and kind of add up the numbers, where does it work out better for me or for the CRA when you're trying to figure that out if I'm an independent contractor and employee? And I would say generally, the CRA probably stands to benefit more from having an employee-employer relationship rather than having that individual viewed as a self-employed individual. And the reason for that is usually because of the higher taxes, for sure, on the income. That could be it. But then again, you might not have a corp, so maybe that's indifferent. But it's the additional payroll costs that come along with having an employee in the form of EHT or EI. And yeah, CPP you get in both circumstances, but there's usually more costs associated with having an employee, and therefore more of a win for CRA, if you will, rather than having an individual who's self-employed. From a straight up income tax perspective, I would say that there's probably the main advantage of having a corporation when you're self-employed, as opposed to being just an individual who's not incorporated and self-employed. And what I mean by that is, and we talked about this in another session, is that when you have a corporation, you got the benefit of paying an initial lower rate of tax on your business income, and you get to control the timing as to when you pay the additional layer of personal taxes when you take the money out of your corporation. Until that time, you actually have more cash and more funds and resources available to expand and grow your business inside of a corporation. If you're an individual running that same business without the corporation, then you're just paying your regular rate of tax as you would as an individual, and therefore not have as much cash or flexibility in terms of controlling that timing with respect to your taxes and your overall burden. So I would say that that is the biggest advantage when you drop in a corporation on that business. Some of the disadvantages of being self-employed would be the record keeping, the upkeep, the administration, and I would say the all the associated costs and even the risk, if you will, because now you're in a position where you're working for yourself, so you're generating your own revenue and your source of income, uh, which is different than being an employee. When you're an employee, you're really insulated from that market risk without having to worry about finding new clients, marketing your services, and trying to maintain relationships necessarily for the benefit of the business. Sometimes there's some of that, and there could be incentives for employees to help generate business and grow somebody else's business, if you will. But ultimately, if you're an employee, you're working for someone else who stands to benefit from taking on that risk themselves. So if you're self-employed, you have more stress in that regard, but you also stand to gain more because you are taking that risk. And that's the trade-off of being self-employed. So the disadvantages are just having that great unknown and that risk, along with the cost of maintaining a separate entity in the form of books and records. And if you're hiring people, dealing with the HR risks associated with hiring people and contracts and paying lawyers and all those extra burdens and costs and administrative um, uh, factors that you wouldn't otherwise have to deal with if you were self or an employee for somebody else. Well, that's a great question that seems to get asked in all circles of life. What expenses can I deduct from my business income? And I think that sometimes crosses the line, or it seems to cross the line of when I have a corporation or I don't have a corporation. That confusion seems to come in when we're talking about business. So again, as I was mentioning, where we have an individual who's self-employed, they already have a business. The question is whether or not they have a corporation. So when you have a business, irrespective of having a corporation or not, your write-offs or your expenses are the same. So for tax purposes, the types of expenses you're allowed to deduct don't change just because you're an individual versus your corporation. There may be some, and there's certain rules that do apply for corporations. So maybe that's not entirely true, but generally speaking, the overwhelming majority of the expenses you're going to probably incur as a small business or as a practitioner running their clinic, you're going to end up being able to deduct whether you're self-employed without a corporation versus self-employed with your own corporation. The key is having that business income that allows you to write that off.